BlackRock literally wants you to leverage to buy more Bitcoin. At least this is what a report by them has said. I found a new video on BlackRock, the conspiracies you don't know. I want to play a part of this for you, and then we'll go into kind of the history about BlackRock and why they may never really want to sell crypto at all. Before we get started though, check out the Telegram. I have 3 videos in there. I guess 2 videos now that are early access. You get videos that are exclusive as well. And if you want to trade crypto, we have one-on-one support for some members in the Telegram. There's more info on that, but check out the link to BYDeFi. You can get in on this $10,000 worth of XRP trading event that's going on right now. You just can sign up under my link or use my code, and then you can get access to this. But let's actually start with the YouTube video going through the conspiracies we don't know about BlackRock.
Instead of constantly buying and selling shares, which is what active investors do, BlackRock and these big asset managers buy a little bit of every company and just hold on to those shares basically indefinitely. This is called passive investing, a title that affords them a lot of legal leeway they otherwise wouldn't get. They own so much that it would be impossible for them to sell out of any one stock in one fell swoop.
When you think about passive, we can't sell a company as long as they're in the index.
Most of the money asset managers manage comes from institutional investors. Those are big pension funds, insurance companies, nonprofits, and university endowments. But while all the money they manage is in the hands of these big institutions, most of it actually comes from regular people, public and private.
So that's interesting. They're talking about like, hey, if we don't like a company, we can't sell them if they're part of the index. The other side of it is too, when they own 10% of a company or 8% or something, it's really hard to start selling them. It's really hard to sell out of all the positions because it would just drop the stock, and it's a really bad look. The reason I bring this up for Bitcoin is once Bitcoin becomes part of more and more portfolios, it's very hard to untangle, right? They don't want to be known as, the company that put this into 50 different portfolios and then started pulling out of 5 or 10, and it dropped the value of all the portfolios, right? So once Bitcoin becomes more intermingled in retirement accounts and target date funds, it's going to be very difficult for them to really sell. Of course, some of their funds they don't really control, like IBIT. They don't necessarily control what goes in and out. They do have, I think, a role to play in that. Like if they are very aggressive in pitching it to clients saying, we think this is a really good fit for you right now, of course they'll get more inflows. If they're like, hey, maybe you should trim, then they could have more outflows, but they don't want to drop the price of Bitcoin. And even then, if they have it in a lot of their portfolios and target date funds, they don't want large outflows from IBIT because then that could hurt all their other assets and ETFs.
Private pension plans, 401k owners, college tuition, and anyone with insurance. This is your money, but it doesn't always come back to you. Nor do you get a say in the companies it gets invested in. While they want good returns on those investments, contrary to how we think about Wolf of Wall Street type investors, that's not actually their main goal. They make their profits from the fees they charge their clients, not from the returns on the money they invest.
That is where we go into IBIT. IBIT has been their crown jewel, I'd say. This is now their highest fee ETF after 17 months, 18 months. They've been able to grow this faster than any ETF in history by a factor of 5. And if you've been watching this, we talk about this regularly. This is their Bitcoin ETF. In 374 days, they were able to grow this to $80 billion. They charge 0.25%, and they make hundreds of millions of dollars a year. This pays them more than any other ETF already. It has the ability to pay them 3, 4, 5 times as much as any other ETF. This might be the first billion-dollar ETF in fees each year because of the fact that if Bitcoin grows by 4x or 3x, let's say it grows by 3x, and we see a little bit more in inflows, maybe a 60% increase in inflows, which I guess isn't a little bit, but it is a large increase, but it could still be done. They could bring in 5 times as much fees, and that would bring them to over $1 billion. This already makes more than the highest AUM fund in all of ETFs, which is VOO. So this is quite impressive, and they obviously want this to do well. They understand that it is a big cash cow for them. And you could probably tell that this was coming because we actually had a report 3 years ago. I covered this extensively at the time, but this report was done by BlackRock. It was a scientific report showing that starting with a 60-40 equity bond portfolio, the optimal Bitcoin allocation is a large 84.9%. So just based on math, based on science, you should be 84.9% Bitcoin. Now, if you're willing to go a little bit more risk on, let's say starting with a 2080 stock bond portfolio, that's less risk on. It still suggests a 12.5% Bitcoin allocation, but the opposite. If you're willing to go more in stocks, 80-20, you should actually be levered 106.6% Bitcoin. So depending on how risky you're feeling, maybe your age and your risk tolerance and your goals, it's literally saying you should go and take margin out or get loans to buy Bitcoin, right? Of course, there's a lot that goes into that. I would not suggest going into debt to buy more Bitcoin, but just based on math, it says literally you should be as long as you possibly can, like buy as much as you possibly can. Again, that's why I do talk about using leverage. If you can use it responsibly, it can give you really good returns. So there's a link to BYDeFi underneath the video. BlackRock endorses it. just kidding. But they do obviously believe strongly in a large allocation to Bitcoin. And there have been private reports and meetings where they claim, like a quant analyst said, it's not crazy to go 30 or 40% Bitcoin because it performs so well. Keep in mind, they got their private trust, their high net worth individuals, got to invest in Bitcoin back in August of 2022. Institutional clients in the US got to buy. So August of 2022, when was that? That was when Bitcoin was around $20,000 to $24,000. Since then, it's up 400%. So their wealthy institutional clients are quite happy, I'm sure, with that if they were able to buy because they got in near the bottom of the bear market. And of course, they also have their IBIT ETF now where anyone can buy. And if you've been watching this channel, you've probably been buying for years. You could have bought the same time that BlackRock was buying. We were reporting on it, that they were setting up this trust that was very bullish. Now they are pushing for an ETH staking ETF. They have their ETH ETF, but they're pushing for staking in that. Maybe something you want to pay attention to, right? But I just wanted to give you a brief history on what's happened with the Bitcoin ETF, showing you why maybe they aren't likely to sell. BlackRock owns other parts of crypto, so they have their IBIT ETF. They also have their BUIDL, BUIDL, which is their tokenized version of a US Treasury money market fund on Ethereum that has $3 billion. I didn't realize it had grown that quickly, but that's a multi-billion dollar project that they have. They also are part of Circle, or they own part of Circle. They participate in the funding rounds. Circle has been the top IPO this year. It came to the market at $30. Now it is selling for $181. They also have investments in Securitize, a platform facilitating tokenization of real-world assets. They have at least $47 million in that. And they are a big pusher of stablecoins as well. So maybe there's some kind of investment that I haven't noticed there, but it is fascinating. They are heavily invested in the crypto market and continue to be. So if you're betting against the market, you're betting against the asset manager with the highest AUM in the world, $13 trillion. Let me know your thoughts on this underneath the video. Thank you so much for watching. If you do want to trade crypto, like I said, check out the link to BYDeFi. There's also a link to BTCC. People have been loving that as well, along with BitUnix and WEEX. Thank you so much. Again, check out the Telegram. Special videos in there, exclusive videos, early access. It's completely free. It's not spammy or anything like that. I post in there maybe once a day or something. And then if you join there, if you're a big trader, we can get you access to another chat where you have direct access to someone at BYDeFi for questions, concerns, comments, all that kind of stuff. It's a good group. So check it out. Thank you so much. I'll see you in the next one. Bye.